Good morning, traders. Welcome to Monday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, as always, we need to check the news, see what's going on, see if anything else is jumping up on the calendar that could be causing some issues. So with that in mind, looking at the news calendar, we do have... Well, I mean, there's a good amount of stuff going on today. As far as the news is concerned, the next news announcements are going to be at 9 o'clock. That's the FOMC member Williams speaking and Brainard speaking at 9:05. 9:45 has manufacturing PMI. That's for February. The forecast is 58.5. 10 o'clock has construction spending, which is the smaller of the two. Then we've got the ISM manufacturing employment. That's forecasted at 53. Not really a whole lot. I mean, again, those are all medium numbers. The ISM manufacturing PMI, that's the big number. That one's forecasted at 58.9. After that, the news kind of dies off. We go into our typical 3 and 6 month bill auctions, total vehicle sales, not a whole lot else. So as far as the news, pretty much 9:05 a little bit with some speakers. Those can definitely throw things around a little bit, but then 10 o'clock, that's the big one. Then from there, kind of dies off. So with the news and everything out of the way, now we can jump into today being the 1st of March, 3/1 of 2021. First up on the list, we've got the NASDAQ with a very nice descending wedge to the downside, and price is getting pretty close to the top of that descending wedge. Hasn't technically physically tested it yet. We've got the bearish L2 to the downside that's kind of holding off on prices, and we are also testing the 3 press wedge top on the top of the high. Well, the high, the top, whatever. There's too many tops going on here. We've got all of that resistance coming in right around the same spot, and everybody is going to be looking to do roughly about the same thing at the same place. If we look at the MACD, we do have some nice divergences going across the highs, although this is also after that big swoop to the downside, and a lot of times when you get that big swoop, well, you've got to look at one other thing that could be standing out, and that would be a negative divergence. It's so shallow that I can't really even draw my line across it, but if you put those highs together, you can see that this high is actually higher than what the price did. Price did not make a higher high there. It's still lower. That would be considered a hidden divergence or a potential additional level of strength for the bears to try to push back down again. We're in that L2. We're at the top of resistance. We're at the highs of a wedge. We're at the top of a 3 press top. We've got, I mean, you name it. We've got it going on right now. The only thing that the sellers don't have is a lower low, lower high. We're still stuck inside of the larger trend to the downside. But in the shorter term, it's just been sort of grinding its way up. We've got to break out of that bullishness first before the sellers can really take it back over. Next up, over on the S&P, and this is one that actually adds to the concern of needing to see a bit of extra proof on the seller side for the NASDAQ. Because if we look at the S&P, this thing looks like a massive level of accumulation. And where could they be accumulating off of? Let's see, 3,800 seems like a pretty nice level for that to happen. If we look at the overall sideways action while the market was down here, and I mean, arguably, it's still down here, we're likely going to see a POC somewhere floating either more towards the lows or in the middle in this case. Now, the reason that's important to see where the volume is taking place is not so much just to see, oh, you know, was I right or was I wrong in my guess, but it's to see who was actually dominating control of this. Were there massive buy traps going on here where all of the volume was down there? Or is this an actual balance that's being accumulated like crazy? Do we see any volume bumps? Where are those volume bumps? Right at the bottom of the range. Where are the other volume bumps? At the top of the range. There are a couple other ones a little bit further down. So it's fairly obvious that this is an accumulation phase. We don't necessarily have a direction. There's no longs, there's no shorts. We're in balance. That's a perfectly bell-shaped V curve that we've got going on here. If we go backward a little bit and include some of that selling pressure, maybe that can give us a bit more of a clue in terms of what's going on. But at the moment, it looks like we've got this big megaphone, and realistically, we tried breaking higher. Buyers were likely trying to buy the pullback for a continuation rally. They got dumped on, and that caused more buyers potentially to come in, but also a lot of sellers to slam the market lower. The next area of interest would have been down towards the lows of support, where more buyers will likely have been coming in, and sellers taking profit. And, well, it blew through that without much thought and started burying itself down into where? Where is all of this volume taking place? Right at that massive turning point. There's a huge amount of accumulation going on the last time the market had that major attempt to try to reverse the trend. Well, we're back again, and we're seeing a huge amount of volume. So the important part here is, where does the market stick in terms of where this volume lands? Obviously, the POC at the moment on that drive down is 38.27 quarter. So as long as the market is above that, then generally speaking, it's going to be seen as relatively bullish. It's not so much a range, wait for down here. It's more a range with kind of a floating bottom, and that bottom is the POC. Then over on the gold market with a gargantuan washout. Wow, what a move down. There is one thing that does stand out very obviously about this move down, and that is its repetition, or at least its appearance of repetition. And what I mean by that is, obviously, it kind of stands out here, but it's just like this one got a little bit bigger. If we look at the overall move, we had that nice channel down, everything was going pretty well, then it started getting a bit bottom weighted and couldn't really reverse the trend, got sucked back down to the low, bulls tried to reverse. I mean, you can feel all of that pent-up energy with the bulls trying to get this to reverse up, and they failed. So realistically, that's a big stop run. There's a lot of stops getting nailed underneath that low. They just gave up. And the further down it went, it was more of a domino effect. The more buyers started just giving up. They're like, no, you know what? It's just not worth it. And that aids to that slide off move. And that's what happened before, right? We have this really nice sideways price action, but it's getting bottom weighted. The buyers are having a really hard time getting anything going. And eventually they give up. And, well, it broke down aggressively. Now, what we can utilize this is for repetition. We can see, how did the market respond to this? Remember, if they responded this way last time, well, chances are they're probably going to respond the same way this time if it looks about the same. We've got that drive down. You can see there's a small little jostle inside there, and then another leg lower before reversing back up. And the reversal back up took back, man, like 85-90% of the move, and then came up and retested the highs again, but more importantly, never broke above the high of that drop. Well, here we've got that really strong drop. We have the context of the bulls giving up, just like we did over here. We have a small little jostle and a quick push down. A big rally up that went back about 90% of the move, and a pullback. Well, realistically, I'm kind of expecting this to go back up to the high, and that's where I want to see a wall of sell orders if the sellers are going to hold this down. And if they're going to fail, that's going to be the point that they're probably going to fail at. We'll see them try to go lower, and they give up, and it starts going the other way. So that's going to be the big point of interest right now. Then we switch gears over to crude oil, and crude oil overall is forming still inside of this really nice channel. We've got a fantastic L2 bounce. Everything is setting up really nicely. But the thing is, it's doing everything that we wanted it to do. It's just doing it too fast. You know, we're getting a beautiful bounce off of an L2. We had a pullback to major structure. It's perfect. It's just it did it over here instead of at the channel low. So really, I mean, honestly, what I would like to see is this market to not do a whole lot of anything. Just get a little bit stuck here and go sideways for a bit, and then give a chance for a quick little flush down, a wedge false break low. That would also be a trap underneath that previous swing, a retest of 61. You can see why I wanted it to wait. Right? It creates such a significantly better scenario over here than it does way over here in the middle. It's not to say that the buyers can't take it. It's just going to be a lot harder. We are gapping up over the weekend, and we had a really strong rally up, but now that rally up is running into some trouble. And if the buyers can't start getting this to go back up again, well, chances are they're probably going to want to fill in the gap. And if they're going to fill in the gap, that's pretty close to the lows already. Why not just keep this move going lower? And that's where we see a full flip all the way down to the negative half, where it's sitting on the positive half. That would be kind of an area of interest that might even stack up around an L3. Then over on the euro, we have some pretty good bearish continuation of the downside, big impulse leg to the downside. And this could be landing on a couple different things. First off, we could be equalizing the larger impulse leg that started at the beginning of the move, right? This first drop lower. We haven't really seen an equalization of that. The closest one they had was this, which, I mean, eventually made its way down there, kind of, sort of. So we could be looking for a 3 measured move down in that way. But a lot of times, impulse legs, I want to see the impulse equalize with another impulse, right? The same distance. So that gives us kind of the zone to the downside. If we measured this initial impulse here and the wider impulse from above, that gives us kind of this breakdown point that gives us a zone of support near the bottom of the channel. And that's where roughly the market is bouncing off of a bit. The knife seems to be hitting the floor. I would like to see it extend a little bit further. And honestly, if it can get a really big blow off on the bottom, the major support where everything stacks up is 1.20080. And of course, that number is very, very close to just the gigantic level of 1.2. So we've got major psychological levels underneath us, and it almost feels like we've got that suction of gravity just yanking on price, dragging it down, and that might be the overextension play to get that done. Then over on the crypto side of things with Bitcoin first, we've got a nice descending wedge on a couple different approaches, really. We've got the larger one, which has been in play for a little while now. And then over the past few days, we've also narrowed down into this shorter term. Now, I could widen this one out, but I wanted to make sure to take a look at what happened here because it's very interesting. We initially would have had this wedge drawn from point A to point B. Remember at the time, if you would have started the day off, we wouldn't have had any of that price action. Well, later on, as the day went on, there was resistance there. The market attempted to break above. Those are those breakout buyers trying to get that market to roll higher. They try, and then they give up. You remember that scenario from before on gold? Same thing happens over and over on all of the different markets, just this one all bunched together in a really, really short time span. But same thing. We break down, it tries rallying higher, and where does it hit? It hits the inside of the wedge and then rejects lower. So although this might not be the wedge anymore, you can definitely see why you don't necessarily want to get rid of those levels straight away. This could just be migrating a little bit further up now, but that next wedge, that next zone of interest is going to be just a bit further up, and it really doesn't make a huge difference. Realistically, we've got MACD divergence going across all of these lows all the way up. It just seems like buyers are accumulating the bottom. Nobody really is kind of looking for a low as of yet. Seemingly, the majority of people, I mean, honestly, looking for the next psychological level, 40,000. We were talking about that in the monthly and weekly brief. It's moving in 20s. Well, the 20,000 that got stuck on a few years ago, and, well, it got stuck there forever, finally broke out. Where to go to? 40,000. When it broke above that, where to go to? 60,000. We backed off. Where are we probably backing off to? 40,000. We're not quite there yet. We've got a little bit more pullback to go until we start hitting into those zones of psychological interest. And then finally on Ethereum, we have another wedge and similar situation to what we were just talking about on Bitcoin. This is why I don't like deleting these wedges straight away. They would have originally drawn it off of these highs and, well, tried to get a breakout. Buyers fail. They tried and then they gave up, got annihilated all the way back over. The market comes back and it misses. Right? Okay, well, why did it miss there? Maybe something's going on. Maybe we've got a megaphone. But then it falls short again. Well, what the heck's going on? You know, what is it? It's missing something. It's not going until it finally does what? It finds structure. And once it finds structure, then the floor comes off, right? There's just nothing left to support it. It needed that hit of structure first. Now we've got the breakdown. What's likely to happen? Eventually, it'll probably try to come back up towards the bottom of that wedge breakout point. And then from there, we'll have to see what they want to do. Do they want to continue it lower or higher? But where we are right now, I'm not looking for this to keep going down, at least not yet. We do have a nice MACD divergence all the way up, and we do have a break of that MACD divergence going up. That adds a lot to the bear trend. But the thing is, where we are now, there are going to be a lot of buyers who are trying to buy on this dip into the 1250s. That's the next major psychological level. We're not quite there yet. It's got to dip a little bit further. But if we can get a bounce off of those 1250s and then a continuation right back up above these 1356 areas, these previous major lows, then realistically anything that happened underneath here is just accumulation before a massive move up. So although it is still bearish, I'm not switching gears over to the bull side yet, unless you're like a buy the dip, buy it when it's cheap DCA in mentality, then obviously yes. But we're in a situation now where we've got to say, hey, the bear trend is starting to break down and it's starting to gain a bit of speed. We've got to wait for these Ethereum sellers to get out of the way first. All right, well, that's going to do it for today. Like we always say, stay safe out there. Keep those stops in play and let the winners run. I hope you have a fantastic trading day today, and as always, we'll see you in the next. Thanks.